As the U.S. markets are currently closed, Lithium Americas Corp, ticker symbol LAC, ended its last trading session on Tuesday, October 14th, at a price of $10.05 per share. This represented a massive single-day surge of $1.62, or an incredible 19.22%. Now, when most people see a 19% gain in a single day, especially in a sector as volatile as lithium mining, the immediate assumption is pure speculation. They chalk it up to a rumor, a sector-wide rally, or just the chaotic nature of commodity-linked equities. The general belief is that this is a high-risk, high-reward gamble that simply paid off for a day. However, the reality of what propelled this stock skyward is far more concrete, far more structural, and points to a fundamental re-rating of the company's future. This wasn't a guess. It was a response to one of the most significant de-risking events in the company's history, an event that many investors, even those using sophisticated platforms from Interactive Brokers or managing Fidelity mutual funds, may have underestimated. The common ground we can all agree on is that lithium is critical for the future of electric vehicles and energy storage. The demand story is well understood. Investors have been looking for the best way to gain exposure to this trend, whether through an individual brokerage account or a more managed solution like Schwab Intelligent Portfolios. The expectation has been to find a producer with viable assets and ride the wave of increasing lithium prices. What many failed to appreciate with Lithium Americas was the immense overhang of geopolitical risk and project financing uncertainty. The company was a tangled web of assets spanning North and South America, each with its own set of political, operational, and financial challenges. The contrarian take, which has now proven to be the correct one, was that the true value here wasn't just in the ground. It was in the corporate structure and its ability to secure top-tier financing. The recent split of the company into two separate entities, Lithium Americas Argentina and the new Lithium Americas focused solely on the Thacker Pass project in Nevada, was the first critical step. This latest price explosion is the direct result of the second and arguably more important step, the finalization of a massive loan from the U.S. Department of Energy. Let's look closer at the recent activity that drove this. The trading volume seen during this 19% rally was multiples of its daily average. This wasn't a slow creep up, it was an explosive move driven by a torrent of buy orders. We saw retail investors on platforms like the Robinhood app and SoFi Invest jumping on the news, recognizing a clear and powerful catalyst. Simultaneously, larger institutional players who might use the advanced trading tools on Interactive Brokers or work with Fidelity Wealth Management were likely increasing their positions significantly. They understand that a conditional commitment from the DOE is one thing, but the formal closing of the loan agreement is a massive green light. It essentially means the U.S. government is now a major financial partner in getting the Thacker Pass mine operational. This isn't just a stamp of approval, it's a financial backstop that removes the single largest question mark that has loomed over this company for years. How would they fund the multi-billion-dollar construction of this mine? This isn't just another lithium stock anymore. It's a strategically vital domestic project with federal backing, a fact that changes everything for anyone considering an online investment in the EV supply chain. It elevates it from a speculative mining play to a quasi-infrastructure project. For those who may be less familiar, let's briefly touch on what Lithium Americas Corp actually is now. Following its recent separation, the company is singularly focused on one thing: developing the Thacker Pass lithium claystone in northern Nevada. This isn't just any deposit, it is the largest known lithium resource in the United States and one of the largest in the world. Its strategic importance cannot be overstated. In a world where supply chains are a matter of national security, having a domestic source of battery-grade lithium carbonate is a top priority for the U.S. government. This is why companies building gigafactories, and by extension the value of stocks like Tesla stock, are so dependent on a stable supply of this raw material. For years, the project faced legal challenges and permitting hurdles. Past performance of the stock often reflected the latest court ruling or protest, creating a choppy and uncertain path for investors. However, with the final legal hurdles cleared and now the funding secured, the company has a clear runway to move from development to construction and eventually production. The business model is simple. Excavate the lithium-bearing clay, process it on-site to produce high-purity lithium carbonate, and sell it to battery manufacturers and automotive OEMs, like its primary offtake partner, General Motors. Looking toward the future, the narrative shifts entirely from if to when. The expectation was a long, arduous, and uncertain path to production. The reality is that the path is now paved with government funding and a clear strategic mandate. The next major catalysts for the stock will be tangible construction milestones at Thacker Pass. Updates on site preparation, the beginning of major earthworks, and progress on the processing plant will be watched incredibly closely. Any new offtake agreements with other automakers or battery producers would be another significant positive development. The risks, of course, have not completely vanished. Large-scale mining projects are notoriously difficult to execute on time and on budget. There is immense execution risk, and any delays or cost overruns could negatively impact sentiment. Furthermore, the global price of lithium will always be a factor. A significant downturn in lithium prices could affect the project's long-term profitability models. However, the backing from the DOE provides a substantial cushion that other junior miners simply do not have. This makes self-investing in LAC a different proposition than it was even a few months ago. The central question for anyone with a Fidelity brokerage account or trading on the SoFi trading platform is whether the current price fully reflects this new reality. Has the 19% jump fully priced in the de-risking of the project, or is this just the beginning of a larger re-rating as the company moves toward becoming a key domestic producer? As construction begins and the project advances, we can expect institutional ownership to grow, potentially providing a steady tailwind for the stock price. The comparison to other volatile growth names like Nvidia stock in the chip sector or even Apple stock in consumer tech is not about the business model, but about the transition from a story of potential to a story of execution. Lithium Americas is now firmly in its execution phase. It's time for a question for everyone watching. Comment below with your honest opinion. Do you believe the U.S. government's loan to Lithium Americas is a smart use of taxpayer funds to secure the EV supply chain? In conclusion, the powerful upward move in Lithium Americas stock was not random noise. The prevailing market expectation was to view it as just another volatile mining stock, subject to the whims of commodity prices and speculative fervor. The deeper reality is that the company has undergone a fundamental transformation. Through a strategic corporate split and the securing of massive federal funding, it has eliminated the two largest risks that held back its valuation for years. The investment thesis has shifted from a speculative bet on a future resource to a more grounded assessment of a fully funded, strategically vital construction project. For those who invest online, the story is no longer about surviving legal battles or securing financing. It's about building and producing a critical material for the next generation of transportation and energy. The gap between the old perception and the new reality is precisely where this 19% surge originated and sets a new foundation for the company's valuation going forward. Oh, disclaimer. This video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Thumbs up! Don't forget to like, comment, and share this video to support the channel.